Hello, this is Howie, and I'm here to help you win with money. Today's topic: now that Tesla was added to the S&P 500, I wanted to talk about the index and maybe what changes should happen next. So let's take a quick look. Look at Tesla. Tesla is on fire. 1 month chart, you see this? Let's look at 6 month chart. Some of the pop was because of the split, and this was most likely because of the inclusion to the S&P 500 gonna happen next month. So you can see the news did cause Tesla shares to pop. Tesla will be one of the largest companies to be added to the S&P 500. It is trading at $500 billion, which is like the top 13th size in the company. But before we go on to what changes the S&P should make, you see this, the S&P 500. Let's look at what was added last time. So the last time in September 8th, they said no to Tesla. And then what they did was they added the smaller businesses, okay? Now, every time you add something, generally speaking, you got to remove something. So they have not announced which companies are being removed currently for the Tesla, but it will be. But I actually think they should announce other changes to this. So let me start with some things that they can remove. We can go here to this website. I put on a filter, S&P 500. You can sort by market cap. So the first thing you want to remove, it all depends on how you want to do it. If you do it based on share market cap, we can remove the smallest ones. But I think there's actually a better way to do this. You want to remove companies from certain sectors and certain industry based on having an overweight influence on the index. And what do I mean by that? If you look here, this is a little bit old data, but you can see that there's a couple industries that are really overweighted. So in order to fix that, how do you then, you can remove some from here and add stuff into from these groups. So let's take a quick look. So your overweights are IT, healthcare, communication, and financials. So if we go back to this, IT, so here's an IT company that we can remove, Xerox. We can remove them. Let's look at, here's another one. Well, this is a much smaller business. Maybe not, right? You want to remove maybe a dyeing company. This is a consulting company. I don't have an opinion on that. But let's just take a quick look somewhere else. Let's see what else what we would remove. Would you remove maybe some small banks? Financial is overweighted. You don't need every financial in the index. What if we remove, I'm trying to look here to see what else will be a good one to remove. I don't know how many asset managers are in here, but I'm sure some of the other big ones are already in here. Again, you don't need every type in here. I would remove something like that. And insurance company, I'm sure you have the big ones in there like MetLife. You can also swap in Bright House Financial eventually and move out some of these smaller ones. Again, you see this like Western Digital. I would probably remove something like this. I just don't think this is a very good company to put in here. And let's just take a look. The Gap, well, I would leave that. You know, I wouldn't want to remove that. Let's just take another quick look somewhere else. And like I don't care about Norton LifeLock. I know it's a antivirus company. Plus they merge with LifeLock, and you know they do background whatever. They have that business with LifeLock, right? It protects your credit, and they can make sure nobody steals your identity. And anything else in here? You see another financial asset management. So I'm sure if you want to reduce some of those by removing some of these smaller businesses. And there was another one here that I didn't think it was needed in here twice. So let me see if I can find it. Yeah, you could. So why is this in the index twice? Because look, if I do this, you see how it doesn't show up? This implies that this is in here twice. Why do you need two tickers in here twice? I don't know why. That makes no sense to me. Maybe I don't understand something. So now that you see which ones I want to remove, the question is, which one should we add? And I want to start with my favorite. I would like to remove one of those smaller businesses under, these businesses were all under $10 billion in market cap. Look at Square. Market cap of Square, $93 billion. Even if this is overpriced, and even if this thing drops to $100 a share, that's a $40 billion company or $45 billion company. I think Square should be added. This is a financial company. Now, I already know you have overweight in financials, but if you remove some of those regional banks and some of the other ones I said, some of those smaller asset managers, I think this company will make a bigger impact. Square does small business transactions. They do micro lending. Their repayment plans on their lending program is much better than almost any system set up for small businesses. It comes out of a percentage of your revenues that you make when you use your Square card or Square reader. And they're doing crypto. So I think there's a lot of things Square can add value to the S&P 500. I don't think anybody will deny that. This is going to be like a Tesla. The day they announce it, this thing may shoot up another 20, 30, 40 bucks. I have no idea. But Square is a business that I like. Now, here's the funniest thing with Square. Early in the year, no one liked them. Look at the share price, 60, 70 bucks. Pandemic hits, drops all the way down to about under 40. And look at this, a 500% run. From $40 over 200. That's huge. I think Square is a company that everybody should look at. The next company. I like Lululemon. And it's a large company. Look. So you want to remove some of those dying ones and put this one in. Again, there's a lot of choices that I mentioned, but I think this is another great company that we can put into the index. And let's just see something here. You see, you want good growth rate, good profits. That's what the S&P looks at. Still popular. People are not going to quit doing yoga. People are doing, they still wear fancy leggings when they're riding their Peloton bikes at home, or when you're doing exercise from home, or when you're running around your block, or you're going to the gym. I know some places around the country can't go to a gym, but this is I don't want to say it's a sleeper. Everybody knows about them. I think they've done much better than EA. I mean, not EA, I'm sorry. I'm talking about UA. I don't know how that happened, but they're doing better than Under Armour. And I think Under Armour will eventually turn around, so I'm not asking you to kick them out of the index, but we can do UA. So for my next pick, these may be more controversial. I still like several of the work from home companies that I think could be added to the S&P 500. Now, whether or not I think they will be added or not is not because I like them, but I think one of the most obvious choices is Zoom. Now, I don't want to say I don't like Zoom. Zoom is a $122 billion business. And I think, again, this is a really large business. They could be added. They could not be. It's one of those things that people will argue about. And I don't know. I don't know if I care if they get added or not. But what I want to talk about is maybe some of the smaller work from home companies that I think may or should be looked at, because I think they're big disruptors industry that they're in. So the first one would be DocuSign. I'm still a big fan of DocuSign. Take a look at the chart. It has a nice run up. DocuSign is now a $40 billion business, but it's not a business that only went up because of COVID. COVID has only accelerated the usefulness of their products. Real estate agents do all the legal contracts through DocuSign. A lot of people who are doing legal paperwork are using DocuSign as their product. And so I think COVID had made their products accelerate to the masses much more. And I think there's a lot more runway ahead. And I think this is a great company to add to the S&P 500. The next work from home stock that I always get confused because the ticker symbols look very similar is Teledocs. Teledocs just completed a merger. And I think this is a new way to do medicine. It is a $28 billion size business. So again, you can remove all those companies under 10 and add some of these bigger players. I think these are the companies that will be running and leading for the next 10, 20 years. These are like the next Amazon. So I think S&P should consider adding something like this into the index and removing some of those old businesses that never grow anymore, or, I just think you have to remove them eventually. The last one I'm going to recommend is probably the smallest one and probably the most controversial. But I needed to pick a real estate business or a REIT, and this is what I come up with. Here you go. Let's look at the chart. It went from $70, $80 all the way up. They are in the cannabis space, and by far the smallest business that I have. And unfortunately, this size of the market cap is still too small for the S&P 500. So maybe they'll get there eventually. Let's see what their profits are. Here you go. Annual profits. They're profitable, so they already hit the four quarters of profit. I would love to see this in the REITs, because as we looked at the underweight, you see that real estate and the REITs, they're underperforming. They need to add more stuff into here that will try to bring some of the balance down from here. So you want to reduce some of those and add more of these. So with that's what I think the S&P should do. There's a lot of choices, a lot of good choices out there. If you have any, just comment below, put in the ticker symbol, tell me why you like it, why you think it should be added to the S&P. But on the other hand, you got to then tell me what you should remove. Should you remove things like L brands? Should you remove regional banks? Should you remove some smaller businesses that just won't grow anymore, like a Xerox that I mentioned? Let me know your thoughts. And that brings me to the end of this episode. Please like, subscribe. Let's help the YouTube algorithm recommend my videos to others so that other people can find my channel. As always, I'm here to help you win with money. Let's share this with our friends. Let's do this together. Let's do this $1 at a time. Let's have a profitable day.